Hello and welcome to the Next 100 Days podcast. My name is Graham Arrowsmith.
And my name's Kevin Appleby. So, Graham, we're going to a subject that's quite close to my heart today. We're talking about how to put business strategy together to grow your business and potentially exit.
Yeah, we have the award-winning business coach, speaker and mastermind mentor, Paul Avins from Oxfordshire. Paul, welcome to the Next 100 Days podcast.
Well, thank you for having me. It's an absolute pleasure to be here. And my goal is to share some content, value and insights that help people have a more successful 100 days after listening to this. So, yeah, looking forward to it.
Well, perfectly put. We'll probably cut that bit out and use it as an advert. Copyright, no one. But anyway, okay. Well, on your website, one of the things that you've got, Paul, is you've got a little formula there, which is basically level up, team up, scale up. Level up plus team up times scale up equals grown up business.
Correct.
Can you start by explaining what the elements of that?
Well, probably I should start by explaining what I mean by grown up business, correct?
Okay.
Because that's I've been doing this for 17 years, but as I say to all the clients, I said, I'm actually an entrepreneur who also coaches. I'm not just a business coach, right? So I own 4 different businesses of my own, all of which I'm currently scaling at the present time, as well as working with currently £45 million plus business owners in the UK. So yes, I own a coaching business, but I also own a digital marketing agency and team profiling business, and I just bought a video production company in December. So I'm actually an entrepreneur first. That's my background, right? Mm-hmm. And over the years of working with over 550 entrepreneurs now, I can tell you there's a difference in the mindset between somebody who's building a lifestyle business, nothing wrong with that at all, and somebody who wants to build what I call a grown-up business. And a grown-up business has those 3 key elements. So it has a leadership, it has a really clear vision, it has vision, values, it has really kind of mission, what we're building, why we're building it. It's really identified a clear niche. It's got a massive growth potential. Yeah. And it's usually at the stage now where it's gone through that, am I going to make it out of startup? Am I actually going to survive? Yes, I've got a real business here. There's a real opportunity to create a 7, 8 figure business, or at that stage. So it's paying consistent profits, you're reinvesting it, you're building a management team, you've got really resilient sales systems now. That means you can attract leads, convert customers, and you're not doing all of that, right? So you're building teams, or as I call it, multiple teams of income. So you're building multiple teams of income that generate that revenue. It's not on you. You're not the engine that's driving it now. You've moved above, you're starting to move out of that operational stage and that I have to do all the selling stage. Sure. And you're really now running it like a business that pays you like an investor. So one of the biggest things I say is that most people get stuck with this mindset of, am I thinking like an owner or am I thinking like an operator? And when you're running a grown-up business, it's about having that mindset and the discipline to think like an owner and then be able to go down and delegate, build teams and build systems and processes that will scale without you so the business can then pay you like an investor. And that's what I mean by a grown-up business. So I mean, it's something that's, it's now got a clear market strategy. It's got a brand, it's got customers, it's got probably recurring income, those kind of things. And it's got the conversation now is, okay, great. That's the leadership bit. We've got the team. Now we scale, we go that way around and we end up with a grown-up business that somebody will pay, £1 million or 5 million or 10 million or whatever. A client of mine in January got paid 15 million for his. So it's like, there's real shareholder value there.
Is there a good or an example that you quite like talking about that you can see that has gone through this process? You probably got lots of them, but one that sticks in your mind.
There's a lot that stick in the mind, but I think before I do that, let me just kind of backtrack for a second, because I think there's something that I noticed that in the market generally is lots of coaches, consultants talk about scale up, and we want to talk about that, but actually, if you don't do the other bits first, it tends to fall over. So if you just focus on scale and you haven't sorted the leadership piece out, you haven't leveled up as a leader, you haven't dealt with the vision and the values, you haven't got real clear on the environment you're building, you haven't mentally leveled up as a leader, it's very hard to then go out and then attract the talent that you're going to need, because talent wants to work for people with a big vision and who want to achieve, do something spectacular. People want to work for people with a bigger vision. The bigger the vision, the better the talent you attract. Mm-hmm. So if you don't do it in that order, then when you go to scale and you start bringing in lots more customers, then you end up getting stuck because you don't have anyone else to delegate things to because you haven't built the team first. So for me, that's why the formula exists in that way. It's been proven to work time and time again across, over 100 different industries. So in terms of giving you one that's a really good example. So I'm just trying to think of one that's done an exit. So we've had 2 or 3 recently. So so construction industry, company that was really kind of focused on understanding its niche, its core market. They wanted to be the UK's disruptor in terms of sustainability. So I ended up, really kind of cracking that code because their vision is to change the way the whole construction industry works and how it's not really built for the environment. And they wanted to create a brand and a business that would really kind of show that it was possible to build 100% carbon neutral houses and then have them run 100%, in fact, the other way, not just 100% neutral, but actually positive contributions back from a carbon perspective.
Okay.
Did that, that's the vision. So you have to get that vision first, get really clear on what that's going to look like. And there are tons of things you're going to have to get over to do that. But did that, then it started to build the management team, started to get, real traction. Spent 2 years with me working as part of my mastermind. And during that, it became really clear that for them to achieve that really big vision, they were going to have to scale massively. Well, scaling in the construction industry requires a fair amount of liquidity and working capital. But at that point, they had a business, they had a proposition. It was profitable. It was clearly defined. They were category kings in terms of they created a brand new category. They were the king of it and they had the brand for it. And in January, they successfully sold a very substantial chunk of that business to private equity who have come in to help them now scale it out massively in terms of that as a journey. So, that's one example. There are lots of others I'm sure we can touch on as we go.
No, it's a good example because basically, if those people in that construction industry who've got a business, they got in touch with you. At that point, which is a couple of years ago or so, then they got in touch with you and then they said, what did they actually say to you, Paul? What was it that you were going to deliver for them that they really couldn't see in their own talent pot at that time?
Yeah. So the reality is that in that particular instance, they came to me to sort out the team challenge, right? So they had the team challenge. So the reason the graphic behind me is on the screen, strategy, talent, cash, they're the 3 things that usually people get stuck with. That mean they reach out to me in some way, shape or form, right? It's either, look, I've got to the point, what I call the scale up ceiling, where which is about 1 million, where you can get there by hustle and hard work and a small core team of like 4 or 5. You can kind of build out to 1 million now with tech and outsourcing and all of those good things you can do. So at that point, though, you then have to ask the question strategically, what are we trying to do? Are we trying to go from here to 5? Are we trying to go to 10? Because there's very different strategies and you need to do very different things. And most people don't have the strategic clarity to know what's a good opportunity and what isn't. What should we be doing? Should we be raising capital? Those kind of things. So I'll give you a good example, right? 2 weeks ago, a client, somebody had been following me on LinkedIn for 11 and a half years because he said the last time we met was 11 years ago. And I was like, I said, I know, it's in my CRM.
I remember it. No, it's clear as day.
11 years ago. He said 11 years ago. He said, but I'm following you on your LinkedIn. I've been waiting till I was ready. And I wanted to work with you, but I didn't have the business that was in the right shape to approach you. I was like, okay. He said, look, I've got the business to £1 million. It owns a category. I said, it's got a global potential, but I don't understand how to take it from 1 to 5 because I've not done that journey. Yeah. And I need a clear strategy to know what to do. And came and spent, first part of the half a day strategy session. And it became really clear that there were 3 big dominoes we needed to knock over before we went any further. One of those was raising funds. 2 was getting a part-time FD in place. And 3 was protecting some IP that wasn't protected. There was a risk if he suddenly scaled out. Right. So that became the 3 things that became really critical from a strategic standpoint to be able to generate. So it's talent we needed, cash we needed, strategy. So all 3 actually we need to get done. Great. As of yesterday, we raised £300,000 of finance, which is amazing. Payback over 7 years at 6%. Insane, but we did that. We got a part-time FD on board and secured 2 major distribution rights into markets that he wasn't in before. So like all of those things have been done in 2 weeks. Right. Now we can go back and go around. Now we've done those, we can finish the strategy in terms of now we've figured those dominoes out. what does the next 12 months, 24 months, 48 months look like for us to get to five or 7 million?
Did you help him identify the distribution opportunities, or did he kind of have those? But
he had those.
Yeah.
To be fair, kind of, the channels were pretty mapped out in that case.
Yeah.
But it was a question of going, look, I can't exploit all the channels because I don't have the cash and I don't have the talent.
Got you.
So what's the strategy to figure those two pieces out? And then once we've done that, then we can go, okay, great. How many other markets can we go into? Yeah. So people normally come and work with me because they've either hit the point where they haven't got the team and they're working crazy hours and all of that, or they're working really hard and they're not generating enough customers on a consistent basis, or their profits aren't really there. So they've built revenue, but they're not built profit, and they don't quite know how to fix that. Or they've got to a point where they've got so stuck in it they can't see how to get to the next level, right? Like I'm not a fan of that phrase, but that's the only one that works really. They're like, okay, I've hit this glass ceiling and I don't understand how I get through it because what I'm doing doesn't work anymore, which is true. The strategy that gets you to 1 doesn't get you to 5, right? It's a different strategy. So your winning strategy becomes a losing strategy, which is something that took me years to learn myself. It's like the thing that gets you to 1 million doesn't get you to 5. But it's like, well, if you don't know that, then you just assume it would because it worked really well to get you to this point. So that's usually how people come to me, because they've got one of those 3 issues: lack of clarity, lack of cash, or they need to sort the team piece out.
I know one thing that you said a few minutes ago when you said part-time FD. At that moment, Kevin, it was like a Pavlovian dog situation because this is home territory for Kevin, isn't it, Kevin?
Yeah, and that's you're probably describing the sort of organisation that is typically a client of my business at Grow CFO.
Yeah.
We're a membership to support CFOs in probably those businesses from £1 million up. They're normally either folk who are looking to take this first CFO or FD role, or have already taken it and need some help getting their head around things. And actually, one of the things that I'm developing at the moment, particularly aimed at the CFO, is helping the CFO really get to grips with strategy and helping the business put the strategy together.
Yep.
My ears did light up, Graham, very much.
It's a sixth sense, Kevin, when it comes to FDs. It turns you on. If he starts talking about marketing, then I'll be attentive. But no, seriously,
Graham,
no.
You've got to learn that the finance guys run the business, not the market.
If you don't, but here's the thing: if you're going to scale up and you don't have a really good handle on the numbers, you're going to run out of cash. I'll tell you that now. So almost everybody I've worked with over the years underestimates exactly how much cash you need to really scale. I'll give you an example. Another client of mine came to see me 3 years ago. It's coming up on 3 years ago, right? In the last 3 years, he's gone from 6 to 24 million. That's insane growth. I mean, that is insane. Now, he happens to be in an industry that has exploded because of everything that's gone on in the last 2 years. He's in packaging and distribution, so blown up. But you try, the skill that's required to manage that kind of growth and the cash and investment in one piece of machinery is £3 million.
Yeah.
One piece. If you're going to make those kind of investments and get to that kind of level, you need the team around you that has the skills to support the vision that you've got. Your job is to hold the vision.
Yeah.
But you better sure bring on a team quickly that can support you with the tactical skills, because otherwise you'll run out of cash and game over.
And it could be that it could be. I'm sorry, Kevin, but it could be that the £3-4 million investment in a machine is being held up because of supply chain issues which are current right now. And I wonder whether that's creeping into your clients' problem set.
Yeah, I mean, everywhere. So, I mean, the construction company I was talking about, price of steel is up 300%. I've got a scaffolding company, like the price of the boards that the scaffolders walk on has gone from like £25 a board to £78 a board. Just distribution costs of getting. I've got a client of mine who does large graphic printing. I mean, stuff that used to cost £24 to get to site is now costing 60 or 70. The packaging business I was talking about, the cost of raw materials is up an insane amount of money at the moment. So we're being hit at the minute with two things that haven't happened in this economy, certainly in the time that, in my lifetime, to be fair. Yeah. Number one, we've never had a labor shortage like we've got right now. No way, haven't had it, never at the level it's at, right? Across every sector I'm working with, everybody's struggling to recruit. And you're talking about people offering if they've got talent, trying to hang on to the talent is now a challenge because they're getting headhunted away because there's so little in the marketplace. And then you've got massive distribution and supply chain issues because of everything that's happened, not just in the UK in the last 2 years, but globally, which is going to take at least another year or so to flush through the system, at least. Yeah. So you've got inflation coming back in for the first time in 30 years, right? And if you've never run a business in that kind of situation, or you're not able to adapt or understand that you've got to really learn how to run a business with totally different constraints. And I know the term pivot's overused. I did a whole thing last year or 2 years ago about actually the 10 steps you need to go through to properly pivot. But this isn't about pivoting. If you haven't got the right financial controls in place, and you aren't aware of the cost base that's going up, and you aren't on top of that, your margin's going to be decimated in 6 months. And you're going to wake up one day going, there's no money in the bank, where did it go?
Yeah. And this is where finance, I think, has a very definite view of looking forwards and not looking backwards. That's one of the key messages that I always want to put across. What value is knowing last month's profit? Well, not at all. You can't do anything to change last month's profits. You've got a accurate forecast looking at next month's profits, the month after's profits, and they're not the right number, then you can start taking action and doing things.
It's predictive and lagging indicators, isn't it? You need both. So like most accountants and finance people look at lagging indicators. And the problem with that is you can't make forward planning decisions off lagging indicators. So you need some element of predictive indicators, like what are you tracking, whether it's leads into a funnel, sales conversions, what are those things looking like? And then talking to your supply chain to go, right, realistically, what's the supply chain doing 3 months out? Because we know if you do that, you can get a handle on the fact that we're going to have a 14% price increase in 3 months' time filtering through, because it's already started at further down the chain. So but it is about predictive and lagging indicators, whether it's in marketing, sales, or finance. You need to have both. It's like oil and fuel in a car. If you don't have both gauges and a speedo, how the heck have you got any chance of driving to any destination?
Yeah,
absolutely.
You're behind your head there. You've got this three parts of it. It's not really a triangle. It's a kind of a triangle with a line over the top of it, and you've kind of got one arrow pointing towards talent, the other one on the opposite way pointing towards cash, and then strategy in the middle of the triangle. It's a bit like it's a sort of a particular it's like
seesaw. It's really designed to be a seesaw.
It is like a seesaw, but it's a bit like, is it an Illuminati type?
No, definitely not.
No. I was just wondering. I was thinking I've seen that before. But tell us a little bit more about the three bits. So you've got talent, cash, and strategy.
Yeah, well, I mean, within every business, here's a shocking statistic, right? So according to the Institute of Directors, when they did a survey, 83% of business owners in the UK, directors, were forecasting a more successful year than the year before. And when they were surveyed, less than 75% of them had any written down plan, which is a terrifying idea, right? Like most people, and I say, if you can't write it down, you can't do it. If you can't get it out of your head, how in the world do you ever expect to communicate it to somebody else? And how are you going to know what is a good decision and what isn't? Because it's the map. The time you need the map is before you get lost, and strategy is the map. But the reality is, because most people haven't got to a point where they've run out of the map, because the map was get started, survive, make a bit of money. That was the plan. And then that happens and you go, okay, now I need to scale, but what does that even mean? Yeah. For me, it starts with strategy. It's like, right, where do you want to be? Where, are we building to sell this to the management team? Are we building this to exit to a private equity? Are we building this to sell it to a trade sale? At some point, business owners don't realize at some point you're going to leave your business, right? You are going to leave it at some point, either by choice or by circumstance, because at some point you're going to, and I talk about jokingly that you've got to have God in your life. And what I mean by that is you've got to have a get out day. Because that's
I like it. I like that get out day.
You've got to have a get out day.
Yeah.
Because if you don't, what happens is you don't have that compelling reason to build it fast and solve it quickly, because you go, well, I've got 20 years or I've got 10 years, and you get trapped.
I'm going to admit to something this morning. I foolishly said to Paul that I reckon I've got about another 10 years or so to work, and it's a bit like if he could have put his hand through the screen and slapped me across the face. He did the same thing, and this was exactly the point you were kind of
metaphorically, just so we're clear, right?
Yeah, well, it's not like you're a bully or anything, but in any way at all. No, it's not. That's not the point. But I got the message.
Yeah. And that comes from personal experience. Okay. So that comes from a place of personal experience where 8 years ago, I had a serious heart attack at the age of 42. I was clinically dead for 4.5 minutes. That was it. Game over. I was done. I literally remember taking my very last breath and thinking, crap, I really didn't do this very well, did I? And this is how it ends at this point. There was just like, how did I get this so wrong? And if it hadn't been for an amazing team of paramedics who just arrived as I went into cardiac arrest and worked like crazy on me for 4.5 minutes, I wouldn't be here. And I'm like, it's not the stuff you worry about that's going to catch you out. It's the stuff you don't see coming, right? It's you don't know how long you've got left to play the game. So put a sense of urgency around it, create a compelling reason to go, look, 3 years I'm going to be done and I'm going to be out, because otherwise you'll talk yourself out of doing things quickly, right? And it's like and when you realize how fragile it is, and that was the gift it gave me, I'm very lucky, right? Less than 2% of people that are under 45 survive at-home heart attacks. I had to make some massive changes in my life as a result of that, and I did. And it's the reason I now have 4 companies that are running and growing successfully. We doubled this year over last year across the group. That's because I've understood how to build teams very quickly, because that was the biggest issue I had. I was trying to do it all. I was trying to be that, if it is to be, it's up to me hero mentality that you can buy into if you're not careful as an entrepreneur. It's all on me. I'll do it. It's just easier if I do it myself rather than delegate. It's quicker if I do it. All of that traps you in that kind of solopreneur mentality, even though the business is not a solopreneur business anymore. Yeah. And that's why strategy is so important, because strategy forces you, like in the next 100 days, if you get really clear on what your strategy, here's the thing, it's not going to always tell you what to say yes to, but it is going to tell you what to say no to. And that's a really big distinction, because most entrepreneurs are chasing shiny objects, shiny pennies, and they go, oh, that's a good idea. That's a good idea. It's like, yeah, but is it going to get us to the exit or to the point where we, can step away from the business and let the management team run it and work 2 days a week, or whatever your vision is? But it's like strategy forces you to go, no, that's not going to get us to that goal. So I say no. It doesn't matter. Yes, it might make us some short-term cash, but it's not going to get us to the goal any quicker to say no.
It makes you more ruthless, doesn't it?
Focused. I'd say focused, but disciplined could be another word for it. But because entrepreneurs aren't. We have attention deficit disorder. We get excited. There's 1,000,001 things. Or I could do this, I could do that. Oh, there's a great idea. Ideas aren't the issue. Execution is the challenge. Yeah. But execution is the bit that's hard. To stay on track and do the boring work, do the stuff that's not glamorous, it's not pretty, but it's the stuff that actually builds shareholder value, which is about, whether it's building teams or it's attracting talent, retaining talent, putting systems in place, generating consistent profits, all of the things that go to creating those outcomes. It's hard to execute.
That's the exact bit that I think we've got to focus on a real problem, Paul. You can put together on a piece of A4, a couple of PowerPoint slides, some strategic goals, the 2 or 3 things you want to do, where you want to get to in the next 3 years.
Yeah.
But what I'm finding increasingly is great. The entrepreneur can do that from his sort of 10,000 feet view. Behind that, you've got to put into who's going to do what, where, and when in order to achieve that. And the bit that's consistently missing for me when I'm looking at businesses is what I'd call the strategic plan.
Correct.
What are the 4 projects? We've got 4 people in the strategy team. So what are the 4 projects that those people are working on in the next 100 days that's going to take us to the end of this quarter?
Yeah. You got to drill down into the micro. So you get the macro, which is like, here are the top, 4 dominoes or 3 dominoes that if we knock them over, they'll have the biggest compound effect. But then you've got to go practical, tactical, and you've got to go, great. So that means in the next I have a 72-hour rule with all my clients, which is if it's a good idea and you haven't touched it or done anything with 72 hours, don't do it. Because if it was that important, you'd either do it in 72 hours or bin it. Because you've got to get stuff moving. Momentum is hard to get, easy to lose. So it's that, right, okay, great. So in the next 100 days, what's that 100-day sprint look like, right? What's it look like? So, right, we've got to get this. If you're in my office, all 3 of my companies have 100-day sprints on the wall over there. And there is the individual thing. And when we use a piece of software that, I don't know if you guys have come across it, called Get Lucidity. We use a piece of software called Get Lucidity with clients to track all of the strategic plans. So it's a living, breathing.
That's interesting. That's exactly the same piece of software that we're talking to CFOs about in Grow CFO.
There you go. So it's like that for me. I know the guys there and love the tool. It's brilliant, and it allows you to build out project plans, put in accountability, becomes your your flight dashboard that you can run strategy off. And every client who's gone onto that, and we've coached them through that and then run coaching programs with them on it. Yeah, I mean, record quarters. I mean, like just the discipline and the execution that goes on when you're able to see exactly what I've got to do and exactly what moves the needle. You suddenly become obsessive over, right, okay, great, everything else.
So if you just looking at going back to your triangle or the this Wayne
formula,
scale,
call it a formula. How about that
formula? Going back to that formula, if you've got a tick in the strategy box,
yep.
And you've got a tick in the talent box, which is you've kind of found the right people to do your bidding.
Yep.
Then the other one takes care of itself, doesn't it? The cash bit.
No, because you've got to make sales and generate sales and a margin, right? So 9 times out of 10, what happens is the cash you make gets reinvested back in talent. The talent should give you a return on investment, which should generate you more cash, right? That should be a cycle in itself. But you're going to need to go out and acquire customers, right? So you're going to still need to do that, and you're going to need different levels of talent, to do that. So if you want to go out and win a £50,000 contract, that's one level of talent. If you want, like a client of mine I was doing some work with yesterday, their goal is landing £500,000 contracts with major OEMs, right. Manufacturing organizations in the US. You're not going to do that with the same kind of talent that lands a £50,000 contract in the UK. You're not. You need a different level of talent, and that's going to require a different level of cash. So the conversation is, right, that's the strategy. We're going to need that kind of talent. How are we going to cash flow it? And then that talent's going to give us what kind of return over the next 12, 24 months by bringing them in. And it just, these are just the 3 things. You just keep going round and round and round. Okay, great. Every issue businesses meet, in my experience, they ask the wrong question. So how are we going to fix this? It's the wrong question. The question is, who do we need to ask? Who's already been there, done it, gone up the mountain before us, or is in the industry that we can ring, who solved this before, and we can ask them how they did it. Because it's always a who, not a how. The who's know the how. You just got to ask for the right people or ask for the right advice. It's like every client I say, and it's a lot, by the way, I say to hire a part-time FD really early on, once they get to about £1 million turnover, to hire a part-time FD, because the money, they pay for themselves. They just pay for themselves. Is to say, okay, great, hire somebody who's run an organization that's been at 5 or 10 million, because they'll look down the mountain and they'll come down and see you and look where, and you go, oh, look, the fastest route is this way. Don't do that. Avoid that. Do this. Like, they save you time. Yeah. And time is the most valuable commodity any of us have. So like, if you can hire somebody who can show you shortcuts, they pay for themselves. They just pay for themselves.
Well, I don't know about you, Kevin, but that's really good advice. And if Paul Avins is not just about talent, cash, and strategy. You've got God knows how much going on, Paul.
Absolutely.
And to say that, what you told us a few minutes ago, into just almost not being with us, to now having this flourishing coaching business, and you're really bringing your talents to lots and lots of businesses.
That's the goal. Yeah.
What's the goal for you? Because you're 50. I mean, Kevin and I have both got 10 plus years on you. What's the goal by the time you catch us up? Which you might never catch us up, but you follow the logic. By the time you get to 60, what's in your life?
So my goal, 2 things really. Number one, what happened to me was a massive wake-up call on a number of levels, obviously. But what it also made me do is double down on the idea of going, I need to help other entrepreneurs avoid the same traps that got me into that mess in the first place, right? Yeah. And too many entrepreneurs I've spoken to over the years have some kind of breakdown, whether it's physical, emotional, or financial, and I managed to do 2 in 1 year, where I had a business that failed and then had the heart attack, which was all related. So like, if you do it on your own and without the right support, and don't ask for help at the right time, which, that's on me, not anybody else, and your ego gets out of control, which is the other risky thing, then you can end up in a real trouble. So for me, the 10-year vision is, look, I want to help 10 million people to be able to build a sustainable grown-up business that gives them both profit, shareholder value, and lifestyle, right? They're the 3 we're shooting for. Because when we survey entrepreneurs, everyone goes, I was interviewed recently and this lady said to me, oh, I bet everyone comes to you just wanting to make more money. And I said, that's absolutely not the truth. Most people come to me wanting to work less hours and understand how to get out of the wheel they're stuck on at the minute that they can't understand how to get off, and they want freedom. Money helps you have more freedom because it gives you more choices. That's what all money does, is give you choices. But you've got to solve the time and money challenges first before you can play a much bigger game. I've got clients who've set charities up who feed, we feed 10,000 children a year in Africa at the moment as a business. And it's like you can't play a bigger game of contribution to society if you're still stuck trying to figure out how to pay the bills and work 7 days a week. And that's not conducive to any kind of family first philosophy, which I have and my companies have. It's like, money's great, but family's first. Anything goes wrong in your family, family first, always, without question.
And so how did you get the that initial sort of body of knowledge? Was it just the University of Knox, etc., or was it just that you're apparently I was listening to something today that we both are followers of Dan Kennedy, and actually Russell Brunson was saying he went to see Dan Kennedy and basically couldn't believe all these shelves full of books.
Yeah.
Is that your thing? Are you
I've got four very big cupboards full of all the personal development books. So I went to, so just to finish the closed loop on the last question, and I'll jump to that. Right? You said, where would I be at 60? I'm still going to be doing this at 60. Why? Because I'm passionate about it. Coaching and helping entrepreneurs is what drives me from a spiritual passion place. I will have built and sold other businesses along the way because I enjoy that game. But actually, I want to help other people play a much bigger game. That's my legacy. That for me is what legacy is, right? How many other people can we help to solve the time and money problem so that they can do what they want to do with their life? That's my metric. So I don't see myself stopping. Someone said, when are you going to retire? I said, I'm not. I said, I'll achieve a level of freedom that allows me to do what I want when I want. That's my goal. I'm not planning on retiring. Why would I give up helping people? That just doesn't make it. To me, that's what lights me up and floats my boat. But I got started in this whole journey when I was 19 years old, and I got dragged screaming and kicking by somebody. And it was my first wife at the time, took me to a network marketing conference. And I remember sitting in the audience, there was about 4,000 or 5,000 people in the audience at this network marketing conference in Birmingham. And never been in anything like that in my life. I struggled with education. I've got dyslexia. So I was, school was not for me, never really kind of academically there. I remember sitting in the room watching somebody on stage, and this person on stage said this line that changed my life. And the line was this. He said, if you do nothing else for the rest of your life, but take 10% of everything you earn and invest it in training and developing you are the product. If you get that mindset and realize that there isn't anything you can't learn if you commit to it, and if you study it and develop the skill, right? There isn't anything out there that you can't learn, but you've got to put in the work and you've got to invest in yourself. And I sat there and went, okay, I'll buy that. And then I started buying books, and I started buying back then tapes and CD programs and, stuff like that. And I was doing 50,000 miles a year in the car at the time in a family business with my father. And I just started to listen to Brian Tracy and Tom Hopkins and Zig Ziglar and all of these kind of guys. And I would go into a sales meeting and I would make a presentation and use what Brian Tracy said, and it would work. And I'd be like, hey, this is cool. This stuff works, right? Like, and it just became something and then we built that business up and I, sold my share to my father and went on and built another business. And purely because I went to a seminar with Jay Abraham in London and Peter Thompson, who's now a friend of mine. And I sat in the room and met two people who had that growth mindset and went, hey, there's a really good idea here for a business. Should we do that? And it's like, for me, there's been times in my career when 10% of my income has meant being in a £50,000 mastermind with Russell Brunson or whatever. And other times it's meant, all I could barely do was pay for a book or a CD back before. God, today. How great is it today? Free podcasts on YouTube. Oh my God. Like, how much money would I have made if that was around 10 or 15 years ago? I'd have made a ton of money. But that was my journey. That was where it started. And it was just, and I still do it today. I mean, I've got two coaches. I'm in a mastermind. It's like, if you want to play at a high level, you got to get around people who are going to challenge you to play at a higher level and go, listen, you're here, but look, you could be here. And I didn't even think that was possible. And you got to realize that you're the product. And there's nothing that you can't learn if you commit to that development journey being forever.
And if you had to look at those things that you've learned, and it seems to me one of the golden bit that you've got is that it's not so much getting people to 1 million, which is, there's going to be, I don't know, 90% of people are going to get to 1 million without your help. Let's just say.
Yeah, true. No, completely true.
But it's agree. Your real goal, secret sauce is that extra bit. So that's the bit that you've picked up, learned, developed the knowledge of, and the hard knocks, whatever you've learned, and you're helping people doing that crucial bit. Because frankly, 1 million's great, but 5 million's 5 times as great, especially if you've got yourself out of the business and you've got that helicopter view and you're the owner, like you say, as you're not the doer. And I think that level of knowledge is something that very few people have.
Years of hard work, years of experience, years of coaching people. Honestly, it's just years in the trenches. I've done 10,000 hours and then some figuring this stuff out. And then I've applied it to my own businesses as well. But it's just hours and hours and hours and hours of coaching. I've been running my masterminds now for 10 years.
Yeah.
This is year 10, right? So I've had so many people go through that program, and we know it's a 24-year journey from 1 million. If you come in at 1 million, to get to 3 is a 24-month journey. If you want to go to 5, it's probably a 3-year journey. Then you've got a very important distinction and decision to make. Is between 5 and 10. And this is something that took us a couple of years to figure out. It's hard to do 5 to 10 organically, right? Unless you've got like really good cash reserves, and I'm talking like £1 million in the bank. Unless you've got really good cash. To make that jump the chasm, as it's often referred to, is incredibly hard to do. The easier way to do it, which is what we teach clients now in our Inner Circle program, is to do it with acquisition. So to go, look, you buy another business, I've had 2 clients buy businesses that are the same size as them in the last quarter, and that's jumped them from 5 to 10 million in 1 quarter. Now there's a whole bunch of stuff that doesn't work if you haven't built team and you haven't built systems and you don't have the cash and stuff behind you. But if you do that right, you can jump to 10. Now you can put other things in place to go from 10 to 15, because you've got a level of momentum and market share that makes you pretty hard to catch. Most people are quite happy though to hang out at 4 million and make 25% net or 20% net profit. Most people are really happy with that. They don't want to go to 10 million. There's a certain type of entrepreneur that goes, I'm about that. I want to do, but then less than 10% of the people I meet want to play that big. You can do great at 3 million, making 30%. Yeah. You can do great. And there's nothing wrong with that. And you should love your life and enjoy it. And fantastic. And if that's your vision, good on you. Genuinely. And I've had clients get to that point and go, Paul, you've got me to the point that I'm happy with that. Thanks very much. Awesome. There's no judgment from me about what your vision is, your vision, but just have one and be really clear about it, because otherwise you get sucked into just blowing with the wind and you can't navigate that way.
Wow.
Does that help?
Off the scale.
So Paul, great. Get that. We're looking to go to 5 million. We might, by exception, be looking to go to 10 million.
Yep.
But we are the Next 100 Days podcast. So we're at £1 million now.
Yep.
Recognise there's need for help. So working with you, what does the next 100 days look like?
Well, how about, can I, rather than do that, would you be all right if I gave you some tools that people could actually use whether they work with me or not? Would that be all right?
Yeah, that'd be good.
Because I'd rather do that. If somebody wants to reach out to me, mastermind programs are full for this year, but if they want to reach out.
That was really what was behind the question. What do I do in the next 100 days?
Okay. Well, I'll give you some practical tools that you can just use regardless. And then obviously if you want to follow me and stuff on social media and pick up on things that I share and give away and all the rest of it, great. But, and if you want to connect, cool. But I'd rather just give some things people can do. Yes.
Great stuff.
So here's a really simple, I'll give you a couple of tools. Number one tool, which is really, really easy to do, is sit down, and it's called Stop, Start, Support. It's 3 columns on a piece of paper. You go, right, come up with the 5 things that we as a business need to stop doing right now that are getting in the way. Where are the 5 biggest friction points, right? So where are the 5 things that either cost us money, waste time? And if you've got a team, sit down with your team and get them to do the list themselves and then compare notes. That right there is going to remove, and then that will go into your 100 days to go, well, if we got rid of those 5 things, life's immediately going to get better, right? That's number one. So that's stop. Then what do we need to start in the next 100 days? Right. We need to start posting regularly on LinkedIn. We need to, whatever it is for you, we need to start monitoring our cash flow more closely. We need to start, recruiting people. Whatever it is we need to do, we need to start appraisals. It could be anything, but come up with 5 things that you got to start in the next 100 days, but you can't do those until you've done the stop bit first, because it's like water in a glass. If the water in a glass is to the top of the glass and someone comes on and says, oh, put some more water in it, it's like, that's what overwhelms people, because people are already full anyway. So you have to take some water out first before you put the next things in. And then thirdly is the column of support, right? Who needs support in the next 100 days? Who on your team needs support? What support do you need, right? What support do you need to give to your family? What support do your suppliers need so that you can build those relationships? So start thinking about, right, how can we strengthen relationships within the business by giving more support to the key people who need it, or what customers need support, so this is really important. Like for us, we used this tool during the COVID crisis when it hit. And I made a really bold statement at the beginning in that March. I said, to my team, I said, we will not lose a single client. Nobody will go bust on my watch, which was a really, and everyone was like, how can you possibly say that? I said, because we make that decision now, then we figure out what we have to do to make that a reality. And we didn't lose a single client. Nobody went under, nobody went bust, no one. And in fact, most people did really well by the end of it. And even those that got beat up still pivoted within 12 months and were able to survive and keep trading. But that's the decision to go, who are you committing to support in the next 100 days? Who needs your support on the team? Who's struggling right now? How can you support people in the next 100 days? So if you just use those three, that's three simple questions that will give you that. Next one would be to sit down and seriously look at your, do what I call product segmentation. So look at what's actually generating you the money, because most people don't, right? So if you actually look at product segmentation, I did this with a business that does 2.5 million pounds in turnover and makes really good money. I won't disclose what, but it's good money. But we did this, and I said, I will guess now that 80% of your revenue is coming from 20% of your customers, and you're not looking after those customers as though they're the most important things in your world. You're treating them like all your customers. Number one, true. So do that and look at revenue segmentation. Who's buying what products are actually making you money and which ones aren't, because they might be the ones you want to stop. Which customers do you need to get closer to? So I teach all of my clients to grade customers, A, B, C, and D, from A being high profit, low maintenance, all the way through to D's being low profit, high maintenance. Grade your accounts in the next 100 days, and then make a plan to either release the D grade clients completely or increase the prices to reflect the level of service they clearly need, because that's fair. And then also work out a plan to get much closer to the top 20%. Because if all you did in your business in the next 12 months was double the amount of money your top 20% of customers spent with you, you would almost double your business, literally. And everyone's going, I've got to get tons and tons of new customers. No, you don't. You just have to get the ones that you've got. You need to serve them at a higher level. You need to go and ask them, what are three things that we could do for you as a business in the next 12 months that would make your life easier as a customer? What are your friction points, and how could we solve that for you? Because if you come from that value standpoint, that's what led to us creating a profiling company, because people went, oh, team's a nightmare. How do we recruit? Well, let's create a solution for that. And then that led to the digital marketing agency, with people going, I don't understand this online marketing and funnels. I don't get all of that. How does that work? Well, okay, what if we provided you a solution to that? But if you just did that, you're going to find this ocean of opportunity that you can sit there and go, I can generate tons of cash that will allow me to afford the next level of talent I need in the next 100 days.
Brilliant.
There's a few things.
Oh, you know what? That's brilliant, and thank you for that, Paul.
All right.
We've got to the point now where we really want to ask you one or two more questions, and then we're over. So basically, Kevin, give us your best question for Paul Avins. You only get one shot.
What should the role of the finance guy be once you've recruited him in this strategy?
What should the role be? So I think it's a good question. I think their role is to not, first of all, be the anchor that tries to slows everything down, go, you can't do that, can't afford this, but it's to understand actually their job is to help facilitate and raise the funds if the funding is needed, because that normally is the case. Growth sucks cash. So it's to be the custodian of the cash, but also to be somebody on the team that understands that sometimes, in order to fulfill the vision, they're going to need to help go and source cash and talk to people and be a solution orientated piece around the cash flow. So for me, it's about, from a strategy point of view, it's understanding the strategy and understanding how their skill set facilitates that and reduces the risk of running out of cash.
Yeah. Do you think there's a role in there for the finance guy where you talk about who are your most profitable customers, who are your most profitable products, for the finance guy to be in there and sorting the analysis out? That's
why my client of mine, who's 2 weeks ago started on our 90-day accelerator program, that's why the first thing I said to him is, you have to hire an FD because you've got no market segmentation. You don't understand which products are making you money and which ones aren't, which SKUs you should get rid of completely. What he didn't understand, he didn't have any of that breakdown. Like if you hire an FD, that's the first job to give them is go, give me market segmentation and analysis on product and profitability, because I could be spending tons of time selling the product that's not as profitable as this one over here that is.
You've asked 2 questions, Kevin. That's enough. And seriously, he's probably got another 3. But the one question I have is investors.
Yeah.
How do I find investors for my businesses?
Okay. So first of all, you've got to be clear on why you would want an investor, because that's going to drive the strategy around it, right? So you might want an investor, but you might be better off to go and raise debt than you are to take on an investor, because investor relations come with that's a whole other, we could do a whole show on that.
We could.
And I've done both, right? I've worked with investors and I've raised debt. So the client who came to me the other day was considering giving up 10%. Well, I'm like, if we can't raise debt, we'll consider that. But actually, what we might be able to raise debt. The key here, and this is, I'll give you a tool that everybody should use, right? Is go through the discipline, whether you want to go debt or look for an investor, of creating a pitch deck.
Right.
So, this is something I've got very good at helping people do, is build out a pitch deck, because what the pitch deck does is 2 things. Number one, it formulates in your own mind very clearly what's part of the strategy. So like, why am I needing this money? What's it going to do for me if I get it? Where am I going to get to? What's the return on investment? And is this an opportunity I should even put in front of an investor that would make them feel like it was a good decision? Number 2, don't just take investors for their money. Yeah. And what I mean by that is, you want to take an investor on because they bring knowledge, wisdom, or network to you, as well as the cash, right? There's so many people out there with money looking to invest right now. It's ridiculous, but that doesn't mean they're a good fit for your values. And it doesn't mean they're going to have a network or experience in your industry that would elevate and reduce the learning curve, which is why you would want to bring an investor on. And then I think the other thing for me with investors, where you've got to be very careful, is like, the best deals with investors that clients have done is the investor's got a clear exit path. So most investors, where it gets horrible and messy, is when they get in without understanding how they get out. So there isn't a when business gets to this, we'll buy you out, and that's their exit. And most of them want an out within 3 to 5 years, and they want to know what the out is. So if you are going to do it, please invest in the following: like, get proper shareholders agreements drawn up. Like, cannot tell you the amount of horror stories that people have come to me and gone, oh, this director just left and set up in competition. I'm like, did you have a shareholders agreement? No. Did you have a non-compete? No. Did you just get these assets in place? Because yes, they cost you in the short term, but I promise you they'll be cheap in the long run.
Yeah.
Just like, man, if you're going to do an investor, you've got to be really careful at the front end about what is expected from each party. And the other big lesson I'll give you here is that, and I learned this one the hard way. This is a lesson that's cost me 6 figures in the last 2 years to get. Okay, so I'm talking from personal experience, because I get it wrong too. I'm on the journey like everybody else. I'm learning all the time. Right. This one caught me out. So this is my lesson. I was involved in a company. I put money in, and the business went, because of COVID, got into trouble. Right. I can tell you now, the investors who were the most difficult to deal with were the most angry, the most aggressive, and frankly toxic, were the ones who had invested the smallest amounts of money each. Okay. The people who had invested multiple 6 figures, and in some cases 7 figures into this business, they were the ones that were the coolest, the calmest, and the most non-emotional about it, because they had other income streams and other things. So if you're going to take an investor, you need to be clear on, how much of your total net worth are you investing right now in this deal? Because if it's more than 20%, they're going to get stressed if you can't reach a payment, or you've got an issue with something in the business and they feel threatened by that money going, they're going to get massively stressed really quickly, and you don't need that. So it needs to be a small percentage of their net worth, and they need to have other income streams and cash flow, so that if for some reason you can't, it happens, right? For some reason you might not be able to pay a dividend on time that you thought, for whatever reason, or you need to make a decision as a board to keep the money in the business to fund growth. You don't want someone sitting there who relies on that money to pay their pension and is going to get really stressed if you can't give it to them. No. So remember, if you're taking investment capital, money is not created equal, and it comes with different types of emotion depending on who's giving it to you.
This has been a brilliant podcast. I think anybody listening to this will have taken away at least 2 or 3 really valuable lessons. Paul Avins, thanks for being on the Next 100 Days podcast.
So, Paul Avins had some brilliant things there for us, Graham. I think where we closed off and what you can do in the next 100 days, I think he gave us 2 very, very clear things that to do.
There was just so much content in that, and we could have almost gone in half a dozen different directions. It's not for nothing that Paul Avins is known as the UK's most sought after business coach and fast growth expert. And, you know, you can find out more about Paul and just have a look at his website. It's really quite simple. It's paulavins.com. Now you follow onto that website, and there's an awful lot of stuff on there that you'll find useful. And you know, you can follow Paul, and even if you want to get involved with him, then there's routes to do that there as well.
And remember, strategy is, as Paul says, as much about stopping doing things, stopping dealing with the customers that don't make you any money, stopping selling the products that you don't have any margin on, as it is working out what it is that you've got to do extra. Yeah,
it's funny because I met a potential new supplier yesterday, well, a probable new supplier yesterday. And the person that led me there has worked with me in a couple of other places, and she moved there. So I went down to see them in the Midlands. And one of the things that we were talking about was a robotic handwriting technique for envelopes. So basically to get the message across in a way that's sort of quite appealing. You stick a stamp on at the same time. It's quite a good way of actually doing it. It looks like it's a handwritten note, much more likely to be opened, much more likely to be read. And so, but the cost of doing it is huge. It's a very big decision. So we're looking at ways in actually getting that into our set of products. But it's one of those things. What does it replace? So I love the idea of, it was support at one end, start in the middle, and stop at the beginning. Get the stop done first. So what am I going to stop? That's going to be interesting. And there's a more general point about stopping something, because we've reached the end of the podcast. Kevin, we're going to stop this podcast right now. Today, I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.